All right. Hello, everybody. Thank you for checking in here. Just going to do a little quick run through and see what's going on in the markets. So, yeah, man, I've been cleaning up my garage and my shed, going down to the dump. It's very empowering, man. It's pretty simple. It's like you just drive down there, you show them your registration that you live in Stanford, and anything under 200 pounds, you can just dump. And if it's over 200 pounds, every other 100 pounds, I think it's another $5.40. So you can basically bring down 500 pounds of stuff and get rid of it for like 20 bucks. All right. Anyway, I don't know why the hell I'm bringing that up. But one of the things that caught my eye before we go through the broader markets is as traders, right, we want to pay attention when things get to historical extremes. And I just happened to be looking at Expedia, and this down here on the bottom is what we call the RSI indicator. It measures momentum. In other words, it measures how much something has moved from time period A to time period B. In this case, the default is 14, but like we talked about, you can change the default number sometimes. Sometimes the default works well. Where is it? And yeah, it's up here, RSI length. And sometimes you're better off with, I don't know, I'm just going to randomly put in 30 here. If you're trading only a small group of stocks, you should definitely screw around a little bit. Now, look at this. From the 30-day point of view, this is the most overbought the stock has been. Like, wow, look at that. All right, so right now, we're going to say it's at RSI is at 75. All right. All right, so the last time this stock was this overbought was December of 2006. Let's see what happened then. It's kind of hard to get the scale on these sometimes. December of 2006. So that was like right here after this huge move. And then it went sideways for a while. All right. Anyway, I'm going to go back and I'm going to go back to the default setting. Like I said, sometimes the default settings work well and sometimes they can be made better. If you look at these indicators, these technical indicators, which are pretty much in any software, you got to remember most of these are just different ways of measuring the same thing, and that's momentum. Is one better than the other? I don't know. Some are a waste of time. Some of them work well. I use the RSI and Bollinger Bands. That's pretty much it. I know people that use this commodity channel index, but you got to just remember, again, these are just different ways of measuring the same thing. So you're better off, in my opinion, just picking like one or two, or maybe two or three, and just getting to really know the nuances of them. All right. So let's see what's going on here. Let's just make sure I change it back. Let me just bring up the S&P. Yeah, so, kind of positive action here. Market's moving higher, but it's not moving higher too quickly, which is really what you want. I mean, I know it's like fun to make money quickly, but markets are more healthy when they move up slow. But we're probably getting a little bit overbought here. Yeah, nothing dramatic. All right, let's go look at our sectors. Remember, it was kind of healthcare and financials that were in the driver's seat. Now, this is kind of interesting here. This could put a top on the market, right? Here's our technology ETF or our tech sector, and it's at resistance. And sometimes when something gets to a resistance level or a level that was resistance before, it runs into resistance again. That's because there's people who bought up here at the top who have been underwater ever since. And now that it's finally back to their price, they're placing sell orders. So if you have enough of these remorseful buyers placing sell orders, then you hit resistance. And that's exactly what's happened yesterday and today. So this isn't a coincidence that this is where, at least for now, this rally has stalled out. So now that means it's going to be important to watch tech again now. If something's like in the middle of a range and just kind of neutral, it's not really going to move the broader market. But if something's at a resistance level or a support level and it reverses, that can move the market. When we're talking about these sectors here. So now this is something else to watch. Healthcare is getting close to a level that was resistance. 150.80. So we'll put this up here. Now, this is an example of resistance can turn into support, and then support can turn into resistance. This is also because of remorse. People sell here, and then the Market goes lower, like, ah, this is great. But when it goes higher, a lot of them say, I made a mistake. If I can buy my shares back at the same price I sold them at, I'm going to. So when the stock, or in this case, the ETF, eventually returns to that price, what happens? They place buy orders. And if there's enough of these buy orders, it turns resistance into support. Market goes higher, then it goes lower. Now you get buyer's remorse, right? This was seller's remorse. Price goes higher. This is buyer's remorse. Price goes lower. People say, I made a mistake. If I can get out of break even, I'm going to. So there's going to be remorseful buyers from here placing sell orders around here. And as you can see on Wednesday, that was resistance. You could also see down here how you get support at support levels. This is another form of seller's remorse. People sell, then it goes higher, and they're like, oh, if it ever gets back to my price, I'm going to buy my shares back. So just remember, certain price levels are more important than others. That's really a big part of understanding how to trade, because it lets you know where the market might stall out or reverse. Now, what do we got here? Financials really ripped higher, but they're consolidating. I don't know. I would probably be looking for some kind of a reversal here. Not yet, though. Let's just say, if we look at this up close here, what price level has been important over the last couple of days? And you can see that yesterday's closing price, 48.75, the low on Wednesday, 48.70, the low today, 48.85. So I would say right around 48.70 is kind of probably gonna be a little bit of support there. So if that breaks, then that's where I think about getting it on the short side, and not necessarily with XLF. Of course, you can do that, but there are stocks within the sector that are going to move more. There's also this inverse ETF that's designed to move at 3 times the amount, so in the opposite direction. So if financials come in 1%, this will be up 3%. Financials come in by 2%, this will be up by 6%, so forth and so on. All right, let me just look at a couple of these other sectors here. Wow, look at this. This is really overbought as well. And this is all right. So this is our consumer discretionary sector. So once again, overbought and at resistance. So we're starting to see some things here that mean this rally could be fizzling out or pausing. And it's pretty simple. You just got major parts of the market are overbought and are reaching levels that had been resistance before. And as we know, there tends to be resistance at levels that have been resistance before. Industrials. I mean, for industrials, this is overbought. All right, let's take a quick look over at oil, see what that's doing. We talked about kind of getting out of our oil position unless the resistance broke, and as you can see, it didn't. So the idea was we got long oil down here when it was at this long-term support level, like we talked about. What's interesting is you see the same patterns on different charts, because regardless of who's doing the trading, they have the same psychology. And that's what we're looking at charts. Like we talked about here, it's getting out of oil because it hit this former top, and sure enough, it has reversed. If this resistance breaks, then we get back in, and then I think the next target is up here. All right, just going to take a look at bonds. If you have any questions, please let me know. Mark Petrino at Gmail. Tell your friends. Yeah, so bond rally is kind of, I should say the bond sell-off is kind of stalled out. All right, thanks everyone. I will talk to you soon.